Welcome to Infinity Capital, everyone. My name is Raj. So today we are going to discuss Aptus Value Housing Finance. It's a affordable housing finance company. So I'm trying out a new way to present my videos. So please let me know how do you like this. The sources of data for this particular report is gathered from ICRA rating, screener, and the company investor presentation. So let's begin. So to begin with, I have these are a few parameters that I check before I go about buying or selling any stock. So I try and find out what sort of business it is, which industry it belongs to, whether it's a cyclical, non-cyclical. So we'll just go through a few parameters quickly. Over here at the bottom, I try to assess the technical analysis strength of the stock of the market. How is the stock performing as compared to the market. We also look at the earning stability, whether there are huge gyrations in the earnings, whether either you have suddenly the earnings are going up pretty high, or they are the company is reporting a loss. So we look at that as well, and we look at industry risk. What is the narrative why we are buying the stock? So before even you embark on the journey of finding out more about the company, there is a narrative that you build, and then you go about finding more about the company, right? So let's begin, whether it's a cyclical business or not. So almost all businesses are cyclical, in my opinion. Some businesses are shallow cyclical, some businesses are deep cyclical, like your cement, steel, some chemicals which are basically very widely used, and then you have your capital goods. However, when we talk about housing finance and house is something which in India still there are a lot of people who don't own their homes. People still live in mud houses, and there are a lot of rural areas where people don't have the basic infrastructure, the basic house to live in. So my guess is that we have another 20-30 years of runway before we become a proper cyclical industry. This industry becomes a proper cyclical industry. That's why I'm calling it shallow cyclical, because the demand is always there. It's a housing finance industry. In the housing finance industry, Aptus is a affordable housing finance company. They give out loans anywhere between 5 lakhs to 15 lakhs. Okay, it's an 18,000 crore market cap company. Okay, so this company gives out loans. So the debt parameter is not applicable. So if it were a different company, I would look at the debt and find out how much debt the company is carrying. Where are we in the economic cycle, the business cycle, and whether the debt can hurt the company or not. So there has been no equity dilution. This is something that I pay attention to, whether the promoters are constantly diluting equity or not. So this company was recently listed, so there's not enough data. Shareholding pattern is something that I pay a lot of importance to. So I'm giving it a 10, 1 out of 10. I'm giving 10 points to the shareholding pattern of this company. We'll go ahead and find out why. It's a low float. Only roughly around between 4 and 5% of the stock is with public. Okay, the credit rating is extremely important. I try to look at the trajectory of the credit rating of the company, if there have been any upgrades or downgrades recently. Credit ratings upgrades would help elevate the price of the stock as well, because then once the credit rating is upgraded, there is more credit worthiness of the company, and then you have analysts and other companies looking at this stock, and they would probably want to put it on their watch list or buy it or accumulate it. Product concentration risk, I don't see any product concentration risk. Basically, it doesn't apply to this company right now because they don't have multiple products. They have multiple products, but mostly it is housing finance. They do give out some small business loans, but it's around 30% of their 30 to 35% of their total portfolio. Diversification risk, I don't see any, but if any of you could figure out if there is a diversification risk in this company, please let me know. Geography risk, yes, there is a geography risk because they have roughly around 200 branches, and most of their branches are in the southern part of India, and that too only in 4 to 5 states. Narrative, so why am I looking at this company? Why do I want to buy this stock? There is strong earnings growth, and if we look at the housing finance earnings growth in the in all of the banks or finance companies that have come out with their earnings report, there is strong growth in housing finance. If you look at IIFL finance report, or if you look at HDFC, Canara Bank, Bank of Baroda, all of these banks are recording growth in the housing finance segment. Housing sector is seeing a turnaround because in the past since 2008-9, the housing sector has been going through a lot of issues. 2008-9 it reached a saturation state, when post which there was a global financial crisis, and after that we had a lot of reforms in the real estate sector. There was RERA, then there was GST that came in, demonetization hit the industry pretty hard, and we've seen some sort of turnaround since 2021 in this sector, right? We have the lowest interest rates right now if you want to buy a house. So these factors are positive factors, and this is the narrative that I am looking at to buy this stock. Industry risk, there is a risk, or there is a overall risk in the what are the risks that the industry can face. So recession, economic slowdown. Obviously, if there is a recession, people will put off the purchase or probably delay the purchase of a house. They are not going to buy it right away because it's a big move and a big liability on their head. If the interest rates are pretty high, so that also deters people from buying homes if there is an economic slowdown. So these are the risks on the industry. There is no liquidity risk in the company right now because their asset liability, there is no mismatch right now. It's pretty strong. Competitive edge, yes, they have because they are giving out small ticket loans. Average loan size is I think around 8 to 9 lakh rupees, and they are focusing on the rural segment and the self-employed segment, which don't have a lot of credit history. Okay, so there is a competitive edge, but there is a risk also because these guys don't have a lot of credit history and they are self-employed, so their cash flows are not their cash flows are going to be basically they will have volatility in their cash flows, and that will probably affect their payment structure, because if the economy is well, the cash flows are all right, because if something goes wrong with the economy, then they would not be able to pay back the loans in time. Scale of operations, small. It's a small company, 18,000 crores. Their total AUM is roughly around 4,800 crores, right? So there is headroom to grow. However, at the same point of time, it's a small company. We need to keep that in mind. Market position, I can't really put Aptus in any position right now because company was formed around 2009-10. They only have roughly around 10 years of business experience. In housing finance, you need to be a very seasoned player because it's a lending business, and where there is leverage, you can the company can go down under pretty quickly if you don't manage your risk well. So in my opinion, I will not give it any market position, market standing. Earning stability, there is earning stability because It's a housing finance company. We will not see very huge gyrations in the earning unless there is an economic slowdown or there is a recession, but that will also not happen in one day or one quarter. It takes some time. So there is earning stability as of now. Working capital management is not applicable in this business. Cash flow and liquidity is strong. We'll see why, what is the reason for that. The technical analysis, what is the current market strength? Currently, since September, CNX Mid Cap 100 and CNX Small Cap 100, both of these are the indexes that I take as a benchmark. So both of these indexes have been going sideways since September. Breakouts are failing. Stocks, although they are making new highs, but they are not constantly going up. Okay. Stock price strength. The stock is the stock price strength is pretty good because it just made a new high, and it is it's showing a good strength as compared to the overall market. Technical strength, yes, the stock has technical strength because earlier it was moving in a very huge, it was gyrating in a big price range. Now it has been trading in a small price range, so that is good. Market direction, again, as I said, market direction has been sideways in the short term. It's upwards in the long term. So buying, looking at the long term is a good strategy right now. So let's move ahead. So Aptus Value Housing Finance, their long-term rating has been upgraded to stable. It has been upgraded from AA minus to A plus stable. So this is a positive sign. Okay, about the company, incorporated in 2009, got listed in August 2021. So they target low middle income segments. Average ticket size is around 7 to 8 lakhs. Okay, and if you see here, geographies, its target geographies are southern states, focus on rural and semi-urban. Okay, so this is the risk in the company, where they don't have enough diversification all throughout the company. Okay, moving forward, this is the liquidity position. So asset liability maturity as of September 2021 reflects no cumulative mismatches. Okay, so they have cash of around 735 crores. Okay, with debt obligations of 409 crore during October 2021 and March 2022. Plus they have 100 crores of sanctioned unutilized fund lines from banks. Okay, so this is pretty strong. Funding profile, they are borrowing, 47% of the borrowings are coming from the banks, 31% from NHB, 17% are debentures, so on and so forth. And the company has largely secured long tenor funding, in the past. So 57% of the total borrowings outstanding have contractual maturity of 7 years and above. So this is the reason why, if we go backwards, I said that the cash flow and liquidity is pretty strong. So this was the reason why. Just a second, guys. Yes, so this was the reason why I said. Okay, and let's look at how do they assess the credit of the borrower. So they have around 60 types of borrower profiles, and they use that data from credit bureau to screen the credit history of potential customers, and they assess the cash flow of the borrowers, and they assess their income during credit appraisal to establish the loan eligibility. So they have an in-house underwriting team. Okay, so they have not restructured any portfolio as of now. Moving on to the next slide. So the senior management, Mr. Anandan, he is the MD and the Chief Executive Officer and founder, has been the key for, has been with the company since 2010. Westbridge is a private equity company which owns around 37%. So they are a part of the promoter group. And Mr. P. Balaji, he is Executive Director and Chief Financial Officer. Mr. Subramaniam is the Chief of Business and Risk. Right, and a couple of Westbridge has put a couple of non-executive directors on the board as well. So since they have the largest chunk of stake in the company, so they have their individual directors on the board as well. So this is the shareholding pattern. If you see, promoters hold around 62%, FII is around 11%, DII is 20%. In public, there are two entities who hold 1.2 and 1.18% each. So there is only roughly about 4.5% of the stock with the public, and this is also the reason why the stock is a low float, and the chances of this stock falling a lot is less, because there isn't enough stock out there in the market to be traded on a regular basis. So this is another reason. If you see, there are a lot of low float stocks which don't fall a lot. DMart is one of those. There are other stocks as well. So low float is a good thing. I take it as a positive. And the shareholding pattern, I give it 10 points on the shareholding pattern. The less number of stocks with the public, the better it is, because retail has a tendency of selling out the stock pretty quickly, and they can't hold on to their losses also if the stock starts correcting, so that puts a negative pressure on the stock. So if there is less holding with retail, the better it is, in my opinion. Nothing against retail investors, by the way, guys. So ticket size, as you see, what are the growth strategies? Ticket size, 5 lakhs to 15 lakh range, new to credit retail segment. So there are a lot of people in India who don't have credit rating, or they are new to credit. So this is the segment that they are going to cater to going forward, right? And their branch expansion is happening in new markets: Odisha, Maharashtra, Chhattisgarh. So these are the new markets that they are opening their branches, and continuous expansion and increasing penetration. So nothing great. This is what most companies talk about. Interesting stuff here. Per capita, Tamil Nadu, Andhra Pradesh, Telangana and Karnataka. This is where the number, the most of the branches are. Total 202 branches. Tamil Nadu has 49%, Andhra Pradesh 30%, Telangana 12%, Karnataka 9%, right? So if you see, huge concentration between Tamil Nadu and Andhra Pradesh. Anything that goes wrong over here, it could be anything: political turnaround, or basically the states are not performing, or anything. So that could affect the company's profitability a lot. These are the two things that on the risk side that I'll be keeping in my eye on, as to what are the collections out of these two states. Okay, because overall the country may be growing at 8%, but not all states are growing at 8%. There are some states which may be behind, some states that may be ahead. So this needs to be monitored. Moving forward, their loan portfolio, 73% is to low income group. Now the thing about low income group is that you can give loan to low income group. There is nothing wrong. We have to enable everybody with credit, because without credit not much can be achieved on a country, company and individual basis also, right? So if you look at the past 8 to 10 years of bank Bajaj Finance's massive stock appreciation, this has been on the back of buy now pay later. So credit is good if you can take it and manage it well, but with the low income category, if there is a problem in the economy, this is the category that gets hit first, and the NPAs can start to rise. Fortunately, COVID is behind us. COVID started in 2020. We are sitting in 2022. We are 2 years. This is the second year after COVID. So we've seen the maximum pain is behind us. So my guess is that we can see continued growth from here. All right. So their HFC AUM is 4,100 crore. NBFC AUM is around 667 crores. Okay. So roughly around 15% of the total book. 13-14% of the total book, and this is the small business loans. This is a little more risky. On a consolidated basis, housing loans are 55%, quasi housing loans 16%, insurance loans 4%, top up 4%, and small business loans around 21%. So this is a bit of the risky part. Housing loans, they have collateral. So 72% are self-employed borrowers, so where the cash flows are not at a steady rate on a month-on-month basis. A salaried guy gets his salary every month, bang on time. So there could be a problem if there is an economic slowdown. 66% rural, average ticket size is below 10 lakhs. Okay. Moving forward, asset under management is 4,800 crores. So it's a small company, small loan book. Okay, their NIMs are pretty good and strong, 8.89%. All right. GNPA is roughly around 1.53%. It was actually 1.1%, but with this new RBI directive, this has become higher, and this has actually become higher for all the companies. Okay, return on assets 8%, ROE 14%, pretty good. Profit after tax of around 101 crores. Okay, so the AUM on a year-on-year basis has increased 27%. Disbursements has gone up by 25%. NIMs have become better, so that is good. PAT has increased by 36%. NPA have increased too. So even if we take the 1.1%, if we don't consider the new RBI circular, NPAs have gone up. But if we see the NPA trajectory for a lot of banks, they have gone up for the last quarter. So something that we need to monitor. We need to monitor it for the next 2-3 quarters and see how the NPA trajectory is panning out. Overall, the meat of the pain is behind us. So these are small aberrations. I believe that we'll continue to see decent growth, and NPA is falling. Okay, moving on. This is the ALM asset liability management chart, and if you see on a short term to long term, they don't have any asset liability mismanagement. They have surplus all throughout. So this is extremely important for a housing finance company. All right. Profit and loss, we see there is continued growth in this company. They've managed to scale the operations since they have started the company, and they've grown their loan book at a pretty staggering pace. This will moderate, going forward. We can't see, this kind of growth moving forward. So we'll have to sort of beat down our expectations a bit. But overall, March 2020 to 2021, there is good growth. Net profit has gone up as well. This is a good thing. On a quarter-on-quarter basis, I see 2 consecutive quarters of growth, and this is the reason why I have bought the stock. September, sales are higher, profit is higher. December, sales are higher, profit is higher. So post December sales is when I started looking at the stock, and then the upgraded credit rating gave me more confidence to buy the stock. So I generally look at 2 to 3 quarters of continued growth to go ahead and buy the stock. This is not a turnaround story. I am looking for earnings growth in this. So if the earnings growth don't come in, I'll be selling the stock. Right, shareholding pattern we've discussed earlier. It's a robust shareholding pattern in my opinion, and these are the marquee investors in the company: Malabar Group, Sikova, right, Aberdeen, DSP. So marquee investors have good amount of position in the company. That gives me more confidence to buy the stock and be invested in it. So I'll be watching the shareholding pattern on a quarter-on-quarter basis to see what's happening. If there are any marquee investors moving out or not, right? So this is pretty robust, and that is the reason I gave 10 points on the shareholding pattern. Now looking at the technical strength of the stock. So if you see, CNX small cap is in turquoise, right? CNX mid cap 100 is in orange, and Aptus value housing finance is in blue. There is an interesting stuff that is happening. Small cap index is actually performing better than the mid cap index, and And if we compare the Aptus Value Housing Finance, if you see that Aptus Value Housing Finance is performing better than both of these indexes, and the outperformance has happened since Jan. So this started happening post the results and after the credit rating came. So so this is a good sign. Now if you see over here, the volatility in the stock was pretty high post it got listed. The volatility was pretty high, after which the volatility subsided and the stock started going up. So I started watching the stock since December because the volatility went down, and I have bought the stock recently. Right now let's do a quick technical analysis. Over here I have the chart of Aptus Value Housing Finance, and what's happening here is basically the stock got listed on 24th of August, post which it was it became extremely volatile. Even there was volatility in the CNX mid cap and small cap index. However, if we look here, since December the volatility has gone down and the stock has started moving up slowly. Okay. Overall, if you look at the weekly chart, this is the range for the stock. All right, and now since the past few weeks, the stock is trading between this range, between 11% range. Okay, what is my entry point? I have accumulated the stock within this range. I have completed making a full position in the stock between 344 and 360. My average price is around 350. This is the range between which I have accumulated the stock. Now, what are the risk parameters that we are looking at technically? When will I exit the stock, or what is the reason that I will exit the stock? So a couple of reasons. If the stock sort of breaks 50-day moving average, breaks below the recent low and starts trading below that, so I will be looking to sell the stock and move out, right? However, if we see from the current price point, the recent low is around 21%. So if the stock falls 20% from here, it could be because of two reasons. One is if the market corrects further, so considering the fact that this stock is performing better than the markets have to correct like 15-20% overall for this stock to also correct 15-20%, right? So that will not happen in a week or 10 days, right? So I will have enough amount of time to make an exit out of this stock. So two reasons: if the stock starts continuously trading below the 50-day moving average, or if it starts continuously trading below the recent lows of 290, 295. What sort of upside am I looking at? So I'm looking at earnings growth in this stock. Okay, and technically there is good strength in the stock, so I'll be looking at the next 2 quarters of earnings and see what sort of earnings are coming in. If the earnings keep coming in on a higher clip, chances are that the stock will do much better. And we have these marquee investors invested in the company, so big investors don't they continue to remain invested if the stock is doing well. So chances are that the stock can continue to perform. If the market corrects and the stock corrects, that is not the reason that I will sell the stock. But if the market is going sideways and the stock starts correcting, then there could be some fundamental earnings problem in the stock, and then I will evaluate it as as we go ahead. So this was a short analysis, guys. Let me know how do you like the analysis. Thanks a lot for watching. Remember, this is not a buy sell recommendation. This video is for educational purposes only. Thanks a lot for watching. Have a good day. Thank you.